PantheonAI presents NASDAQ S&P hit 6,036 and gold Bitcoin surge. Welcome back to the PAI Morning Briefing, everyone. I'm John, and it is June 12th, 2025. Good morning, Sarah.
Good morning, John, and good morning to all our listeners. I'm Sarah, and I am definitely ready to dive into today's market happenings. It feels like there's just so much to unpack, doesn't it?
Absolutely. We've got a wealth of topics on deck. From a quick peek at the major indexes to some really deep dives into market-moving news, sector analysis, and hopefully a few laughs along the way.
I'm looking forward to it. So where should we start today? I imagine everyone's eyes are on those market numbers.
That's right. Let's kick things off with a brief overview of what's happening. The S&P 500, for instance, stood at roughly 6,036.16 today, registering a pretty steady increase of about 0.436%. Not a huge jump, but definitely positive momentum.
A nice, consistent gain. What about the Dow?
The Dow Jones, our champions of blue-chip stocks, came in around 42,855.82, up by roughly 0.277%. And the NASDAQ, home to so many of our tech giants, is trading close to 19,653.68, a modest increase of around 0.38%.
So steady, modest gains across the board for the big ones. That's encouraging. But what about the smaller cap universe, like the Russell 2000? That often gives us a different read on the market's pulse.
You've got it. The Russell 2000, which really gives us a taste of that entrepreneurial spirit, has fallen slightly by about 0.33% to approximately 2,135.13. And then, in the ever-volatile world of cryptocurrencies, we're seeing some sharper moves.
Oh, tell me about it. Bitcoin and Ethereum always keeping us on our toes?
Exactly. Bitcoin, the digital gold, is trading at about 107,353.21, down roughly 1.227%. And Ethereum, not far behind, is around 2,729.18, down nearly 1.57% today.
That's fascinating, isn't it? We see these minor fluctuations in the larger indexes, but the digital asset space is reacting so much more sharply. It really feels like traditional markets are finding their footing with modest gains, while crypto is still on that roller coaster ride. Do you think that signals investors are still hedging against some of those tech-heavy growth narratives?
I think you're onto something there, Sarah. It definitely seems to suggest that. And it actually ties into one of our major market trends today, this incredible convergence of stocks, Bitcoin, and gold, all racing to record highs. An analyst noted that it appears to be a common thread, a convergence of investor sentiment, risk-on behavior, and a search for alternative safe havens.
That's quite a trio. Equities hitting near peak levels, gold gaining momentum as an inflation hedge, and Bitcoin, despite today's dip, still drawing in so many long-term believers. It really does imply that investors are seeking diversification not just within asset classes, but in their overall strategy. But John, why now? What's driving this?
That's the million-dollar question, isn't it? Well, market participants have been digesting a steady stream of economic data, constantly adjusting portfolios. Some speculate that this move toward higher perceived safety across various asset classes is spurred by global uncertainties and domestic economic recalibrations. It's almost like investors are hedging their bets, channeling cash into both traditional blue-chip stocks and these alternative assets.
It's almost funny, isn't it? While some investors are busy buying gold like it's going out of style, others are sticking with their quirky love affairs with Bitcoin, even when it takes a nosedive that could rival your favorite amusement park ride.
Speaking of roller coasters, that's a perfect segue into some of today's most important headlines. Our first cluster of stories really centers around that record high run we just discussed for stocks, Bitcoin, and gold. This rare convergence has definitely caught the attention of many analysts.
And it makes sense, right? With inflation concerns always looming, gold's appeal as a safe haven has really been rekindled. And Bitcoin, despite today's slip, has often been described as the digital era's equivalent of gold. This dual narrative is so intriguing because it truly underscores the evolving mindset of a generation that's just as comfortable discussing blockchain as they are talking about bullion.
Absolutely. Now, in a separate batch of stories titled 10 Things to Watch in the Stock Market Thursday, including inflation data and Oracle, experts are highlighting that Wall Street seems poised for a lower open tomorrow. With inflation data expected and corporate updates from names like Oracle, there's this buzz of anticipation.
It's like Wall Street is on a cautious treadmill, isn't it? Steady steps forward, but with the knowledge that every step could reveal hidden surprises. And it raises an interesting question for our listeners. In an era where tech companies are frequently outperforming, how much weight are you giving to macroeconomic indicators like inflation when making your daily trading decisions? Sometimes, the interplay between tech innovation and economic fundamentals can feel a bit like mixing oil and water, yet somehow, they create an intriguing cocktail.
That's a great point, Sarah. And speaking of interesting cocktails, let's talk about labor market dynamics. Jobless claims have held steady at an 8-month high, and many economists are pointing their fingers at the end of the school year as a contributing factor.
That might seem counterintuitive at first, but once you consider that many students and part-time workers re-enter the job market with the beginning of summer, the numbers can get a little sticky. What's the general sentiment there?
Well, one economist pointed out that while there are signs of softening, there's no evidence suggesting the labor market is on the brink of a significant downturn. It's a bit like saying just because the band is playing a softer tune doesn't mean the whole party's over. The underlying rhythm of our labor markets still seems quite robust.
That's reassuring. Now, another headline that's been reverberating is around the fate of the US dollar, which has touched a 3-year low. What does this mean for the global financial stage?
Quite a lot, actually. A weaker dollar can fuel inflation here at home, but it might also lend a boost to emerging market assets as investors look for better returns outside traditional safe havens. It really makes you wonder, are we on the cusp of a currency shakeup that might herald further volatility, or is this just a temporary kink in the road?
That's a big question. Let's shift gears now and dive into some detailed sector analysis, starting with the technology sector. Despite all this chatter about a lower open and some headwinds, tech continues to show incredible resilience, doesn't it?
It really does. Many tech companies, especially those with strong innovative pipelines, have been delivering earnings that exceed expectations. But with inflation data on the horizon and macroeconomic pressures, there's this palpable sense of cautious optimism. It's much like watching a high-wire act. You know there's a risk of falling off if you're not careful, but the view from the top remains incredibly alluring.
That's a great analogy. So what about the energy sector? I imagine it's a completely different picture.
A very different picture indeed. Oil prices have been on their own roller coaster ride, pressured by geopolitical tensions and supply-demand imbalances. Energy companies are under significant pressure to innovate and diversify as the world transitions to more sustainable forms of energy. Investors are really looking for companies that aren't just relying on the old fossil fuel playbook, but are making strides in renewables. It's almost like watching your favorite classic film get a modern, high-definition reboot. Familiar, yet excitingly new, with potential for growth that might just surprise you.
I love that comparison. And next up, the finance sector. Banks and financial institutions have been treading carefully, especially with all the debates about rising interest rates and regulatory changes.
They certainly have, but many financial experts argue that a mild increase in interest rates could actually boost bank earnings, as long as it doesn't come with an accompanying spike in defaults. The sentiment on Wall Street is that while digital transformation is imperative, the fundamentals of financial services, trust, relationships, and earnings reliability are as important as ever.
Right. It's kind of like the relationship between a classic novel and its modern adaptations, isn't it? There's a timeless quality to the core narrative, even as the presentation evolves.
Exactly. Now let's take a global view. Central banks worldwide are still maneuvering their monetary policies amidst persistent inflation and sluggish economic recovery in some regions. A weaker dollar, for instance, could have a mixed impact on international trade balances. And those record highs in assets like gold, stocks, and even Bitcoin in some parts of the world, they suggest investors are increasingly seeking safety and diversification in these uncertain times.
It really begs the question, doesn't it? Are we witnessing the early stages of a truly multipolar market landscape, where risk is distributed more broadly? Or is this just the market testing the waters before the next big shift? And speaking of insights, what are the experts saying? I know a lot of prominent analysts are cautioning that while the current market optimism is palpable, caution is definitely warranted.
They are. They suggest investors keep a close eye on upcoming inflation data and subsequent moves by central banks. Diversification remains absolutely key, especially with the tech sector showing strong fundamentals but facing potential macroeconomic headwinds. And you know, as much as I love a confident analyst, sometimes the best strategy really is to just sit back, enjoy the ride, and keep your portfolio as diversified as your favorite dinner buffet, a little bit of everything in the right proportions.
That's fantastic advice, John. And there's also been a buzz around the potential for earnings surprises in the coming weeks, especially in sectors that have been under pressure. So if you're invested in tech, definitely monitor those earnings reports very closely. Sometimes, companies perceived to be struggling can really turn a corner with a surprising beat.
That dynamic, combined with a cautious yet opportunistic approach from central banks, could lead to a fascinating period. And looking at global market implications, European markets are watching our domestic trends closely, especially with their own energy transitions and fiscal challenges. In Asia, where growth trajectories differ, there's ongoing recalibration of policies that might offer interesting investment opportunities.
And when you factor in the constant chatter about geopolitical risks and trade dynamics, it really reminds us that no market in the world operates in isolation. It's almost like our portfolios are a patchwork quilt now, isn't it? Each piece making the whole that much more interesting, unpredictable, and occasionally a bit quirky.
That's a perfect way to put it, Sarah. Before we close, I want to leave our listeners with a few thought-provoking questions. Have you considered how your portfolio might weather this mix of record highs and gradual downturns? With cryptocurrencies, equities, and alternative assets all setting their own pace, what benchmarks are you using to decide when to hold and when to fold? And with the echo of a 3-year low in the dollar, could this be the tipping point for a broader currency correction?
Those are excellent questions for everyone to ponder. And remember, you can always ask questions to our very own AI copilot for deeper insights. As we wrap up this morning's briefing, let's just reiterate those key takeaways. We're seeing major indexes inching upward with modest gains, while smaller cap stocks show slight weakness, and the digital currency market has a sharper decline. It's a mix of caution and opportunity.
Right. And there's that remarkable convergence in the behavior of stocks, gold, and Bitcoin, driven by a shared desire among investors to hedge against broader economic uncertainties. Jobless claims and labor market indicators remain a topic of careful monitoring, and the persistent pressure on the dollar continues to keep a vigilant eye on global trade dynamics.
And sector-wise, tech remains resilient despite macro headwinds. The energy sector is evolving in response to the global shift toward clean energy, and finance is set to benefit from that nuanced interplay between rising interest rates and economic fundamentals.
Fantastic summary, Sarah. And before we let you go, a special shout out to our partners at PantheonAI, your trusty information copilot. They really do help make sense of the overwhelming flow of market data each day, so you can focus on strategizing your next move without feeling like you're drowning in information.
They really do. And let's recap with a bit of humor, shall we? They say the market is like a box of chocolates. But today, it feels like someone might have sneakily swapped half the chocolates for a blend of spicy jalapeno treats. It's unpredictable, sometimes a little nutty, but always exciting because you never quite know what you're about to bite into next.
That's so true. So whether you're a seasoned investor or just stepping into this market labyrinth, remember, diversify, maintain your cool, and try not to take every market dip as a signal that you've finally lost your touch. As technology continues to redefine every aspect of our financial lives, how will emerging innovations reshape your investment strategies? There's a never-ending stream of opportunities and challenges ahead.
And at the end of the day, isn't the journey just as exciting as the destination?
It really is. Thank you for spending your morning with us here on the PAI Morning Briefing. We hope you found our deep dive into the markets both informative and engaging. Make sure to come back for the next episode tomorrow, where we'll further explore the market trends and emerging narratives that shape our global economy. And remember, you can always huddle with our AI copilot for insights, data analysis, and those timely answers you need. Until then, keep asking the hard questions, stay diversified, and as always, remember, learning shouldn't feel like a full-time job. Have a wonderful day and happy investing.
PantheonAI, your information copilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.